But we begin with the markets, as we always do here on NYSE Live. Joining me now is Jay Woods. He's the Chief Market Strategist at Freedom Capital Markets. Jay, welcome.
Hey, good to be here.
So we just talked about those job numbers that came out yesterday. What was your takeaway from them?
Yeah, there were a couple takeaways from that. They changed how they go into those jobs numbers, so the numbers were a little wonky. I'm still trying to decipher it, but what happened was the knee-jerk reaction was unemployment fell from 4.4 to 4.3%. This is great news. This is good that those rate cuts are actually working, because why did we start cutting rates? Because unemployment was rising. Now it opens up this new can of worms. All right, if we're getting unemployment under control and inflation is stabilized, why do we need to cut rates anymore? So I think the focus will turn to the Fed. I'm more concerned about that CPI number tomorrow on Friday, because that inflation number is the number that's really going to move markets. We had the knee-jerk reaction to rally, then we sold off, and at the end of the day we were flat. So that jobs number, while important, while heading in the right direction, didn't do much to move markets. I think the CPI could do that tomorrow.
What are you expecting for the CPI data?
Well, we're expecting it to tick down. So we were at 2.7% last month in the core, and now we're looking for a reading of 2.5 according to economist estimates. So if we get that reading where it decreases, that's great. It's going towards the Fed's mandated 2% goal, and I put that in air quotes if you're listening, because that is what they want to see. They want to see that trend start to go lower. And again, if that happens, Jerome Powell's got 2 meetings left. He has no reason to cut rates, and then it falls to Kevin Warsh in that nomination process. Is he going to be under pressure, independent, when he takes the reins, if approved? So to me, this is just setting up more drama later on in the Fed, but the market's liking it. The market's at all-time highs. The S&P equal weight is on fire. We're seeing sectors that have been lagging start to lead, and this is positive for the market. So these numbers have been very positive.
And how much of an impact do these data points like jobs numbers and CPI data have on the Fed and their rate cut policy?
Oh, huge impacts. These numbers are what they put under the microscope for that dual mandate. The dual mandate being, is unemployment at historic lows? It is. And then the CPI, is inflation under control? We were concerned with tariffs. We saw a spike up, and now that fear is starting to subside, and hopefully we can normalize on the inflation front too. So they have major impacts, and then it leads to Fed policy, which we'll hear the minutes next week, and then the Fed meeting is early March. So it'll be interesting to see how they decipher the data as well.
Right, and I understand you say that market breadth has been expanding. What are you seeing, and what does it say about the underlying market strength?
Yeah, so they say rotation's the lifeblood of a bull market, but when you get rotation into sectors that have been lagging, some that are seen as defensive, like consumer staples making new highs, material stocks breaking out, energy, these are late bull cycle leaders. Now, the tech stocks that have led us, they've had good earnings. We're seeing earnings growth. So the economy is humming, but the concern is, can they keep this growth up? Is AI going to start to, be so competitive that it will eat away at some of these companies that have made their living, especially in the software space, by creating these developments on the software front? So it's very fascinating to watch stocks have great earnings like a Palantir, a Meta, and not be able to follow through. So the psychology of investors is changing. It's not what have you done for me lately? Things have been great. What are you going to do for me in the future? We have concerns there. And let's go to stocks and sectors that have been underperforming. You look at materials, you look under the hood there, you look at agricultural stocks just starting to break out. You look at energy, ExxonMobil, Chevron near all-time highs, Exxon already there. This is good if you have a broad, diversified portfolio, but if you're so tech-centric, which a lot of people are, and people, when we cover markets, those are the stocks we click on first because they make up the majority of our portfolio. That's a little concerning. We'll see if that sell-off is just that and an opportunity to buy the dip, or a little bit more. I think the next few weeks will be telling. This earnings season, not that good for tech from a price action point of view, but as far as the numbers go, it was pretty solid.
You mentioned earnings. What are the themes that you're taking away so far from this Q4?
Yeah, great earnings don't always get rewarded, as we saw in technology. But what I'm watching now, I think next week we have a key earnings to watch, and that's Walmart. It's the number one staple in the world. The stock is trading at a multiple it's never traded at before, and technically it's gone a little bit parabolic. When they report earnings, can it continue that uptrend, or are they going to see good earnings and see the stock sell off? So I want to see the psychology behind that, because maybe the staples trade will fade out a little bit and subside, and then we rotate where? Back to technology, because some of these names have really gone on sale, and it's worth nibbling in a few of them.
What other sectors are you looking at?
Yeah, I mean, you look at communications, you look at Google, what that's done, Meta, those are the two biggest stocks in the XLC, the communications ETF. Those stocks have continued to do well fundamentally, and then on the downside, discretionary, Tesla and Amazon, the two biggest stocks in the discretionary sector. Amazon's down 7 days in a row after reporting earnings that didn't wow the street. This 200 level, very critical there. I hope it can hold. As a shareholder, I really hope it can hold. And then Tesla, all eyes on Elon Musk, not because of car sales and what they're doing there, but the future technology, the robotics side and the SpaceX side. There could be one of the biggest IPOs in our history debut with SpaceX if they can get that moving forward sometime in the second half of next year. So I'm watching Elon Musk and the discretionary stocks, and it's geared up. And then we talk about IPOs. We're celebrating Forgent. They went public last week. They're ringing the opening bell here at the New York Stock Exchange. We're seeing an influx of IPOs and a broad base of IPOs. So I think we're doing well, but when you focus so much on technology and you see some of the headlines, you may not realize, the overall market's doing well, even though the S&P 500 can't get above that 7,000 mark. It's consolidating. I think we get there eventually. We just need technology to rebound.
All right, and in our last 30 seconds, what is your outlook for the IPO market? We've had a lot here at the New York Stock Exchange.
I'm always optimistic about the IPO market. You can never tell. Everyone wants market conditions to be ideal. Well, new highs make it ideal. Successful IPOs make it ideal. Private equity has kept a lot of these big companies on the sideline. Let's see if they tap the public markets. I still think now is a great time to enter, but companies are waiting a lot longer to go public than they used to. I'd like to see that trend start to change. We're off to a good start for 2026, but one hiccup in the market and people kind of pull back. So let's hope we can go full steam ahead, because I know it's been a party here almost every day at the New York Stock Exchange with new listings. It's been fun.
All right. Thank you, Jay Woods, Chief Market Strategist at Freedom Capital Markets, for joining us.
You got it.